Shadim Shari. Indeed, Green Paradise. That's what we got this week. Welcome to the Stock Market Weekend Review. It is Saturday, September 21st, 2024. I'm not going to switch it up today on doing things a little bit different than what I normally do doing the weekend reviews. I like to switch things up, and I might change the format going forward. Um, I do like to change things up. I do like to change things up because it get boring and stale for me. I can't say for the viewer, not that I have a whole lot of viewers. So, but for me, as a person that sit here and do this on a daily and weekly basis, it get tiring and boring. More so boring than tiring. It's not tiring. It's more boring because I'm not sure how other people does it. I sit here every day from Monday through Saturday looking at the same chart practically daily, sometime on a minute by minute. Okay, there's only so much S&P, QQQ, or whatever stock I looked at on a daily basis that I care to review every Saturday. I hope other people figure out how to do it on their own. I don't know. I don't know how other people do it. I'm sure everyone that trade look at the same thing every day. I do. And do I want to talk about every single movement of every single ticker every day? No, absolutely not. Okay, absolutely not. If you need to be handheld through every single movement, you're in the wrong business. You're in the wrong profession. You're in the wrong hobby. Do something else. Okay, you grow up. Grow up. To be blunt, if you need to list, my hope and goal for this channel, as crazy as it sounds, is to have no viewers. I want to end dependency. Unlike any other channel on YouTube where people want to increase viewers, I want the opposite. I want people to be dependent of their own thoughts, process on how to approach the market. That has been the goal. For those that know me, that's what I want. Okay, I want people to be able to critically think on their own, to approach investing on their own instead of needing sound bites on TV or on YouTube. Trust me, if you know me, it is exactly how I want people to behave. I don't need you to watch my video. I don't want you to listen to me to tell you what to do. I want you to be able to make up your own decision on what to do. That's how it is. That's how it should be. And if you want a long-term success on investing, that's the best approach. Or just buy the SPY ETF, the QQQ ETF, and you're good to go. Trust me. All right. If you are to be trading, swing trading, day trading, you need to figure out a system that works for you, not some guy on YouTube telling you, "Oh, it's a buy now, it's a sell now." Okay, please don't. Okay, I don't. I don't go on YouTube to see you buy ideas. Do I miss a lot? Absolutely. There's only so many eyes and ears to listen to. Okay, I have my two eyes and my two ears, and I try to listen to my own thinking. So let's analyze a little bit of what happened this week. And if you don't like this new format, go away. Like I said, the goal here is to have no views. Please go away. If you don't find this helpful, go away. And if you develop your own thinking, your own thought process, you don't need my analysis, or you find my analysis to be stupid, outdated, not useful, good, go away. All right. Now that I have my spiel to chase people far away as possible, so that I can end this channel eventually. And yes, there will be an end to this channel sometime in the next 12 months. There will be an end. I have no desire to do this, to be blunt, very blunt. Okay, let's see what we can. I want to play this little soundbite from Powell and then give you my thoughts on why I think the Fed did what he did, and we'll see. Let me play this soundbite. First question.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. Than expected. Retail was strong, third quarter GDP running 3%. So what changed that made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the.
Okay. I stop it right there. You are free to go on YouTube to play the entire press conference. It is just type in Jerome Powell press conference and it will pop right up. Okay. What he said right there is the most important part of the entire hour plus presentation and Q&A. That's all you need. I save you the hassle, but you're free to listen to the whole thing because the same question came up again and again and again and again. Why did he cut rate by 50 pips? He said it right there. And what he alluded to, without spelling it out for you, is that, for those that remember, a couple of weeks ago, when the job revision came in 818,000 less than they reported. Okay, so the weak labor market, the exact word that he used was artificially inflated. Oh, it's insanity. It is insanity that something can be artificially. No, it's not artificially, it's purposely. My God, it's insane. It is insane that this country is run this way. Artificially? How do you artificially inflate anything? Oh my God, help me, help me. Help me help you. Okay? But that's the thing. The unemployment number is artificially inflated. It's ugly. It's bad. Okay, so that's one big point that he said that gleaned over by many people that are in the camp that things are great. We are doing fine. Economy is fine. Consumer is strong. Job market resilient. Yada 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 yada. Okay, it go on and on and on. And retail sale is strong. Retail sale is strong because consumers are taking on more debt than ever to survive. Oh my God, it's so insane that the people on TV cannot see. But hey, they have their own agenda. I'm just telling you facts. Okay, so let's jump to something else. Okay, you see this? This is the unemployment rate. Going back to the last recession, okay? Okay, the gray line here, this gray line that you see right there, that's the recession. That's what the government put out as the start and the end of the last recession. And there is a resemblance, you know the old saying, history rhyme, history repeat, whatever. Every recession is slightly different. Okay, I'm saying the same thing that I have said quite many times for those that even care to remember. Every recession is different in depth and duration. That's the reality, because every recession is slightly different. So you can't expect the same. But history does rhyme. And the first thing that you should consider eerily similar is the last recession. If you don't know, the Fed cut rate by 50 bips the last recession on the exact date, September 18, 2007. I have said this many times this past year, this past 12 months, especially this year, that what's going on this year remind me a lot of 2007. For those that paid attention, I said this many times. It reminds me a lot of 2007. And in September 18 of 2007, the Fed cut rate by 50 bips. Do you know what the unemployment rate was? Okay, there you go. September, 4.7. Before that, look, eerily similar. Okay, so in July, we get 4.7. In August, we got the slight dip. Exactly the same thing that we have this year. For those that forgot, we got 4.3. I predicted August to be higher. I was wrong. It came down 4.2. So it came down 0.1, just like it did in August of 2007 compared to July of 2007. History is rhyming here, okay? It's fascinating to me. Now, the Fed cut rate in September 18th, 2007. And let's take a look. In October, it's still the same. November, it's still the same, okay? In December, it jumped. So, just because the Fed cut rate in September of 2007, it does not mean that things are going to crash right away. And I will show you that in the chart later of the SPY, the QQQ, and all the major indices. Okay, so history is repeating. It's not shocking how the market behaved this week. It's surprising because to me, what surprised me is the way the market ignoring history more so than, okay, this is what happened in the past and it's doing exactly the same thing. To me, it is shocking. It's more shocking to see how people behave as if 2007 did not happen. Okay, now, does it mean that we're gonna mirror exactly what happened in 2007 and 2008? No, like I said, every recession is different in depth and duration. But we will track it. We will track it just as we track everything the past 2 years on this channel, right? So for now, so as you can see, unemployment rate did not explode from July through November. Okay, so keep that in mind. Let me jump to the next piece of data that I want to show before I go into the indices. If I can figure it out how to do it. Okay, what am I doing wrong here? Huh. Where am I? Oh, is a piece of data that I want to show that somehow I cannot figure it out to show it on the screen. It is the U6 number. Where is it? I had it. See, I'm fumbling, stumbling. Let me see if I can figure it out. Give me a chance here. Where is it? Sometime it kills me. Okay, as you can see, I am about as useless when it comes down to technology as it can be. So first of all, let me put this away. And so can I bring this forward? This is how bad I am with technology sometimes. Okay, bear with me. Bear with me. Personally, I don't know why this is there. Make no sense that this thing on the left side is there. But whatever. All right, let's move on to this so that we don't waste any more time. Here is a U6 unemployment rate. U6 is a more useful piece of data to use, and that's something that I will follow more closely because it takes into, when the government put out unemployment rate on a monthly basis, it's a number that is kind of, first of all, it's a survey. It's retarded. There's no other way to label the number. It's retarded because it's a survey. It's not even a real number or an accurate number of any sort. But it is what it is. It is the unemployment rate that the government put out, 4.2%. Even if you work 1 hour a week, you have a job. That's how that number interpret. Okay, it does not take into account that your job is not a full-time job. The U6 take into account and compute and compare full-time job and part-time job, and that is more important. Okay, so and that number has jumped significantly, and going forward, we will pay attention to this number. For those that don't remember, that U6 number going back to the Great Recession jumped from similar level to something like 16, 18%. So I gotta go back and look. But yeah, it went up way high. Okay, so it literally doubled or more than double from where it is right now. Because the trend is up. Okay, this is an ugly trend. If you look at by any measure, this is an ugly trend as far as how the market the job market is. It's not good. It's not pretty. Okay, it's more people are laid off, even though it's the unemployment rate showing. Look at this. Okay, just for the sake of looking at this, the unemployment rate went from 4.3% to 4.2%. So it went down. So the press release that you see everywhere when that data come out, job market is strong, resilient, economy is fine. Well, guess what? The U6 number spiked higher because guess what? Job is not strong. People are doing Uber, Drive, Lyft, Drive, whatever. They're picking up part-time job. Okay, so it's not good. Okay, so keep that in mind. Pay attention to the U6 number because it is ugly. It is not good. It is not. Okay, it is not strong. It's not resilient, but it's not reflected in the unemployment rate, which the government and the politicians love to talk about. The U6 number is going higher. That means that less people are working full-time and they're struggling part-time and they are borrowing, taking on debt, buy now, pay later, even for grocery. Is insanity. Okay, it's absolute insanity that Walmart have buy now, pay later. It's absolute insanity. All right, I'm done with my spiel there. Let's see if I can How do I get rid of that thing on the left side? That is just bizarre. It's just absolutely bizarre. But let's get rid of things that make no sense so that I can, what did I do? See, this is why I don't stray away from normality. Once I stray away from normality, things go haywire. What is going on? I'm dumbfounded at the stuff that's on the screen. I don't know what is going on. How is this thing on the screen? Why is it blocking everything? Wow. I am dumbfounded because it's not even on my screen. I don't even know what is. Well, my apology. Oh, that's all I can say is I don't know what is going on, and let me fumble and stumble my way through this so that I can get to Thinkorswim, because as of right now, I literally don't know what I did wrong or how to get rid of that stupid thing on the screen that you see there. Why is it that way? How is it that way? That is so insane. I think I figured it out. Goodbye, good riddance. Whew, that was crazy. That was almost insane. That would teach me a lesson not to veer away from normality. All right, TLT. Back to, okay, so I drew in the channel, like you can see, channel low, channel high, channel low, channel low. So it's just moving in the channel, okay? As you can see right there. Nothing here to be fearful. So did I sell a bunch of 97 put spread for Monday, Wednesday, and Friday next week? The answer is yes. A whole lot of them. And let me repeat. If you go back and, let me go back and look, okay? Let me. So I don't have to listen to people asking me questions. Let's go back to 2007, 2009. Okay? Look. Let's say, when the government come out and admit that we are in a recession, that's where the big move is going to happen. Okay? Until then, yes, there are up and down with TOT, with economic data. It is what it is. All right? It's not like, oh my God, the government cut rate. That's it. TOT is going to go to the moon. No, it's not. Stop it. Nobody's predicting it's going to the moon. I didn't. If you pay attention, I predicted maybe 108, 112 range by the end of the year. Yes, I said that many times. Because we still have to go with economic data. Week by week. Okay, so who knows how the econ data will play out, and that's the reason why I show you what happened with the unemployment rate back in 2007 and 2008. From the time they start cutting rate in September of 2007 through November, the unemployment rate didn't change. Okay, it didn't change. So think about this. Look, this is September 9/18 right here. 9/18 right there. Okay, I'm gonna draw a line. That's 9/17, so I'm gonna have to change it to 9/18. Edit property, I want it 918. Okay, that's it. That's when the Fed cut rate back in 2007. That's the start, right? And yes, there are not exactly, as you can see right there, 918. You see this? The TLT goes straight up. The answer is no. Okay, so stop. If for anyone that is whining, crying, complaining, stop it. Just look back in history. This is what's wrong with people on TV, on YouTube. Everybody just can't look at the past. You know the old saying, those that whatever the old saying is, if you can't remember history, blah blah blah, whatever. But yeah, TLT will do what it does, and then as the Fed cut rate more, it will keep on moving. Okay, just be patient. Yikes, yikes. Okay, yikes. SPY, what happened when the Fed cut rate? Okay, look, you see this yellow horizontal line that I drew in? What is that? That's the all-time high before the Fed cut rate. Okay, so the market hit the all-time high in July, eerily similar to what we had. Yes, the Fed cut rate here. Let's zoom in. Okay, 9/18, 2007. Guess what? You see this big, yeah. So yeah, the market, it rhymes. Okay, the way the market behaved, and then it hit an all-time high, even higher in October, and then something happened. Well, you tell me why the market behaved the way it behaved, even though the job market was fine all the way through November, right? And the Fed cut rate again. Perhaps that's when the market say, wait a minute. Perhaps the 50 bips cut here was a warning. And by the time the Fed cut rate again, so trust me, okay? All of this resilient in the market is more like year-end pumping, right? We could have the same thing. The market can play out exactly the same way this time compared to 2007. You had that year-end rally, right? You got in December, look, it pumped and then it give, right? So it can happen. Let's take a look at the QQQ. Same thing, okay? Look, the yellow line once again is at that time all-time high. And look at this craziness. You see this big candle? What day is that? 9/18/2007. History rhymes. Sure, it didn't go up and stay up. It retraced more, but then it goes. So can the market go higher? Yes. And then after the new year, say hello, my friend. Trust me, we will track this on a weekly basis, monthly basis, until I end this channel in about a year or less, right? It is what it is. So pay attention to history, right? So do not act surprised if the job markets, the unemployment rate stay the same next month or the month after. Whatever the survey the government use, who cares? Pay attention to U6 because the U6 number will keep going higher. That will signal to you that the job market is really bad and people are struggling. And as people struggle, they spend less money. As company make less money, layoff increase. That's just normalcy. Okay, it is what it is. Everyone that go on TV and say that everything is fine and there's no recession coming and all that stuff, whatever. Okay, it's history will show if I'm wrong or they are wrong, right? So that's all I'm saying. I don't really care, and if I'm wrong, so be it. I make money either way. Okay, the way I manage my portfolio, I make money either way. It is not like I don't make 100% bet on one side, so that if the market is if the economy is in a recession, I lose money. If the economy is not in a recession, I lose money. No, I make money on both sides. I trade the market. It is what it is. All right. So that being said, I already yapped for like half an hour. My God, see, this is why this. I figured that's why this today is gonna be one of those days where I really can't stick with the old format. I just gotta go shoot at the hip and do something different. All right, let's take a look at Bitcoin. It's trying to break out from the trend. Okay, look, you got resistant, try to break out, fail, resistant. What's next? If this hold, then up there. Okay, next spot to trim. I already trim. Right, I trim twice. I trim here and I trim here, and then I will be patient to trim up there, and then of course the all-time high. Okay, we go one step at a time, right? I trim so far. I trim 25% of my position. Okay, between the two trim, and I will trim 25% more, perhaps even. Yeah, I do 25% more. That make it 50%, right? So if it's 25 here, then another 25 here, then that means that I'll be half out. Yeah, that's the plan, right? So as far as Bitcoin, that's the thing to do. Gold. Like I said, I'm going off script today, so I'm not going to go in any kind of similar pattern. Gold looking good. It's first thing. It stalled out for a couple days here at the fib, and then it gap up. G. Why is gold going up? I thought we're not in a recession. The way the market behaves sometimes is head scratching, because if you pay attention to what I've been saying, I always said that gold will behave very well into a recession, and coming out of recession, gold outperform, right? So what's going on here? Why is TLT down for 2 days? Why? And why is gold up? Yeah. You got to understand, the market dynamic is always a buy and a seller. It's always two sides. Okay, it's always a battle between two sides. The sentiment between the two sides, always. Okay, so it's never one side all or the other side all. Okay, it's always a battle on two sides. Okay, so for now, the people that love gold is ignoring the talk that everything is fine. They say something is wrong. Same thing with Bitcoin. Okay, something's going on there. But yeah, gold looking good. I don't need to sell. I'm holding. Okay, so if you have gold, good on you. GDX, it's not cheap. Okay, I sold a lot of naked puts as well as put spread last week. And would I buy gold, GDX down here? Yeah, I fully expect GDX to move in a up and down, more volatile than gold. That's just the nature of GDX, as you can see, right? And right now it's not cheap. Right now it's there are times for those that follow me, I said it's not cheap here. I scream it's cheap here. Here it's not cheap. Okay, so we play the game. If it come down for whatever reason to the 20, to the 50, for sure the 50. Okay, if it fill the gaps for whatever the reason, I don't care what the reason is. I'm buying. I'm buying big. Okay, go bigly. It is that simple. We stay with the technical. Okay, so that's done with that. Yeah, as far as the major indices, I don't need to go there. Right? I already showed you what happened in 2007 with the SPY, QQQ. You can go back and look at DIA, IWM, the same thing. I don't need to babysit, handheld everything for everyone. Okay, just grow up. Grow up. That's my. To be blunt, I want everyone to grow up, graduate, please. Let's take a look at banks. Okay, I still have some Goldman Sachs. The order is up there. Get to the all-time high, and I'm out. It's that simple. Morgan Stanley, I'm out. Wells Fargo, I'm out. Okay, if you haven't not go out, up there. Be disciplined with your technical. Okay, this is not the time to willy-nilly buying things because some guys on TV tell you to buy something. Please don't. Schwab, I still have. I have. Actually, I have a couple assigned. I sold 2 puts, 2 cover call at 65, and 2 cover calls at 66, and that is fine. So 2 went out this morning at 65, and I'm fine with that. Okay, I bought them down here. I bought them in the 62 range. They make the money, and would I sell naked puts on them? Yeah, I have no problem selling 62. Okay, because can Schwab come back down below 63? Yeah, but to me, I still have 200 shares, and that's fine, right? It's up there. Can it come down? Yeah, But as far as Schwab, I do like it more than other financial. As TLT Hill, you heard me saying this many times. As TLT heals, so will Schwab. It is that simple. Any other narrative, I don't care. I don't care to hear Schwab sucks. I don't care. Okay. I'm sure some people that use Schwab or Thinkorswim, or I have some account, some Roth IRA that I don't do any kind of trading on with TD Ameritrade, and they were bought by Schwab. So yes, I do have a small account with Schwab. I don't care to trade it. Does it matter if Schwab sucks? No, it doesn't matter. So yes, I like Schwab here, and I will look to restock those shares by selling 63, more likely 63 naked puts next week. Okay, I'm very pleased with this call, to be honest, because I've been selling cover calls on them for a long time. Okay, ever since buying down here. Okay, so I've been selling cover calls. Sometimes I sold 66, 67, but this time I sold 65, 66 because it was way down here, right? Who would have thought that would pop up there, especially the way TLT behaved the last couple of days. But hey, I'm not gonna complain. Take the game. All right, let's move to the Max 7, and then I'm gonna end after the Max 7. I don't need to hit all the other sector. The biggest surprise was Meta. Wow, wow, wow. Okay, wow. I'm not complaining. I trim a little bit at the all-time high, but I still have the rest of the share that I have down here. I only trim a tiny bit on the way up. So I'm kind of glad I did that. But is this the end? What is this yellow line that I drew in? What is this? Is this something important? Let me make it okay. Let's go back. Let's go back. Okay, I see it here. Could this be a long-term trend line? Let's go multi-year. Let's go 15 years. Okay. I guess it's you can let's do it real quick. I want to see closer. Yeah, I guess you can call it. It potentially it could be key, right? But until it's now here's the thing. If it move higher, if Meta 2 days is not enough, okay? But if Meta continue to drift higher, then guess what? I will flip this fib extension that we have. Well, this is the fib that look at retracement. And I will do a flip extension from this point onward, okay? So the way how Meta behave the next couple of days, next week, if it hang around higher or drift higher, then we flip into a fib extension. But until then, I'm leaving things where they are, all right? Tesla breaking out potentially. Well, fill the gaps, okay? Fill the gaps. I would say, well, kind of, but if you still have it, I would say have your order in at the, let's say the gap low is 245.63. If you want to be greedy, maybe do a 246 trim order. Yeah, maybe it pop over there real quick and retrace. But for now, that's what I would do if I have Tesla, and I don't. Google is still my favorite of the Max 7 because it has retraced. But would I chase it here? No. Do I sell put spread down here? The answer is yes. To me, doing 155, 150 put spread is okay. I would do that. Okay. If you pay attention to YouTube, one of the things that I hate on YouTube, and I watch a lot of YouTube, is the ads, right? But for me, it's not about saving $10. To me, I keep, I don't pay for YouTube to go ad free because I want to have real experience on what YouTube is doing with ads. And if you are a YouTube frequent viewer like I have for the past 15 plus years, the ads are absolutely insane right now. Okay, more insane now than ever. So YouTube is making money hand over fist with ads. I can tell you, first off, auto ads are off the hook. There was time last year, the year before, that you don't see any auto ads. Now they are off the hook. Incentive, buy this car, blah blah blah. It's everywhere. On top of that, the amount of ads that I cannot skip is off the hook. Okay, but this is why I keep YouTube ads going, because I want real live market studies on what YouTube's doing. And I can tell you, they are making money hand over fist between political ads and so many ads that you cannot skip. They are forcing viewers to watch it. And by forcing us to sit through the 1 minute, the 30-second ads, they're making money hand over fist. Okay, so I like YouTube here. If there's any Max 7 that I say I don't have any problem not trimming, not selling, but adding, selling put spread, it is YouTube, Google. Okay, it's Google all the way. Any kind of knee-jerk reaction on sell-off like we had here, it's a buy. It's a buy. Okay, so come down to 150 level. I will back up the truck. If there's any Max 7 that I will back up the truck for, antitrust, Department of Justice breakup, you name it, give it to me. Give it to me. Right? Amazon. It's a Trump. Okay, if you're greedy, up there, channel high. Channel high is lining up with all-time high. Okay, so yeah, do it. Apple. Woo! Yeah. No. It's a no. Okay. Last week looked like there was a chance to perhaps buy at the 100. No, it's a no. It's a hell no to me. And I'm wrong. I was wrong on Apple for a long time. It's okay. Netflix. No, absolutely not. Absolutely not. Okay, not touching it, not chasing it, not buying it, not holding it. Down here. 100. 200, no brainer. Okay, 200 is a no brainer. But if you think that 200 will never be seen again, I take that bet. I'll take anyone bet that we will not see the 200 touching Netflix in the next 6 months. I take that bet. Anyone want to take that bet? Name your price. In the next 6 months. Okay, 6 months. So no, I take that bet. All right. So Nvidia, not so hot. Not so hot. Okay, not so hot. I still have it. I have ordered to trim up there, and even 121, and it's not. Why 121? That's the rep high. Okay. So up there, if we get up to 121, I would like to trim some more. Would I trim more at 124? Yes. Would I trim? Would I go all out or mostly out at up there at 130? Yes, absolutely. Okay, but not sure what will be the driver there. Okay, so for now, let's do another trend line to see 140.76. If you want to do that, we can draw in that trend line. So potentially, maybe it will stall out at 127-ish. Okay, so yeah, like I said, just gotta, just gotta pay attention to what's going on there. It's not strong. It's not strong whatsoever. The bloom is off that flower for sure. All right. Like I said, I'm gonna skip the rest. What I might do going forward is from Monday to Friday, I might go sector heavy, so that I talk about, like, let's say, for example, like Monday, I might just go pharma, biotech. Tuesday, maybe doing consumer staple. But I play it by ears. I shoot at that from the hip. I try not to plan things. I'm not a planner when it comes down to YouTube. Like I said, not for 5 people to watch the video. My goal, make it 0. That would be wonderful. Okay, if the view down to like 2 or 3, then I know I done my job. I either chase people away from because I'm such a nasty, horrible person, or I taught people all the lesson they needed and they don't need my hand holding anymore. Either way works for me. All right, people, enjoy your weekend. Bye-bye.